The Shane Ellis idea has seen some shocking twists, and as we sit here, this is actually happening. Now, don't worry if you've never heard of it before, I'm going to quickly bring you up to speed. In addition, I'd like to share some new intel with you. Demand for ETFs and RLUSD together might be the final component needed to propel this notion into overdrive. So let me to explain the fundamentals of what Shane Ellis is even suggesting, and I'll then provide all of the recently discovered data. According to Shane Ellis's theory, if the limited supply on exchanges in the public float is overwhelmed by strong institutional demand, particularly from channels like spot ETFs and payment quarters, XRP may undergo a sharp price reset as a result of an unexpected liquidity shock. According to this notion, the price can spike quickly overnight rather than increasing gradually over time. In aggressive buying washes through sell orders and concentrate on system-wide repricing. Thin exchange order books are the fundamental ideas here. According to Shane Ellis, the liquidity of the XRP exchange can be shallow, which means that big buy orders have the potential to exhaust all available sell orders and drive the price significantly higher. These ETF providers are surreptitiously obtaining all the necessary resources via dark pools and OTC desks. There is no effect on the free market, correct? However, consider this situation. Imagine putting $50 or perhaps $100 million straight into these thin order books on paper. The cost would increase dramatically. That may sound dramatic, but stay tuned because I'll be showing you real-life examples of this happening toward the end of the video. Alright, so a liquidity-driven price reset is mentioned. Start consuming a sizable amount of supply if international payment corridors adopt XRP for institutional products like ETFs or settlements. In order to avoid liquidity runouts, the market would have immediately revalued XRP. Then there was the supply shock, of course. The fundamentals of market mechanics form the basis of the theory. When a fixed or declining supply is met with a persistently regulated demand from ETFs and institutions, prices may rise quickly as the sell walls dissolve. I'm not even kidding, dude. Now that I'm getting into this material, my pulse is racing because I'm so excited. As if I'm actually sitting here figuring out how to get even more XRP. Okay, order a quick crash course on fundamentals. An order book, which is essentially this continuously changing feed, is what powers any cryptocurrency exchange that displays every buy and sell order that is currently in progress. Order book basics. An order book, which is merely a dynamic list of all active buy and sell orders for a specific asset, such as XRP, is present on every cryptocurrency exchange. The number of units available at each price is referred to as the order book's depth. Order books indicate that there is a limited amount of XRP available at every price point. Therefore, the price may rise swiftly due to the spike in demand. Smaller orders make up the majority of retail trading, but when institutions or ETFs make large purchases, they quickly use up all of the available liquidity at reduced prices. The way it works is that when a big buy order, say for millions of XRP, lands on an exchange, it goes through the order book and feels every single sell order at the lowest pricing. Take a look at what has transpired in the nearly week and a half after the launch of spot ETFs. We are discussing an influx of over $600 million. It's crazy money. What if the same $600 million instead crashed into the free markets? These incredible deals we're looking at would vanish entirely. If there aren't enough sells left after those sell orders are filled, a gap appears on the next available price, which is significantly higher. Instead of a gradual climb, the price surges in a single transaction. Arbitrage traders attempt to counteract this by selling from other venues, but if the wave is large enough, or if OTC and custody are involved, ETF arbitrage is unable to keep up, which results in severe system-wide repricing. Then take a look at this. Examples of how ETFs affect the real world include the need for quick large purchases in response to ETF inflows. Because of fund arrangements, newly seeded capital is converted to XRP immediately rather than gradually. When ETFs purchase billions of XRP, the currencies are transferred to fund custody wallets, effectively locking them away and making them unavailable for regular trade. Hear me out, these ETFs have been stifling everything for years. With this, no one sits there scalping trades every morning. Reinforced supply shock is the outcome. Because there is less XRP accessible on exchanges, new demand drives up prices even more quickly. In these circumstances, even little additional purchases can raise the price by a few percent or more. And that theory of the OTC desk, yes, we have already dabbled in that one. The over-the-counter market is the foundation of one of the most convincing and obscure explanations regarding the XRP liquidity constraint. OTC trades, in contrast to conventional purchases on centralized exchanges, take place off-book and are frequently mediated in private between big purchasers, such as institutions or sovereign bodies, and sellers, such as exchanges, whales, or Ripple's escrow. These merchants completely deplete supply even if they don't immediately affect pricing. Consider this: if a federal bank payment quarter or large hedge fund wishes to purchase 200 million XRP, they will not go to Binance. These coins are sourced from exchanges, over-the-counter partners, or reserve pools by a desk like as BitCo, Galaxy Digital, Cumberland, or even Ripple itself. That XRP is no longer in use. After the trade's complete, they frequently go to custodial cold wallets and are never seen again until years later. And that's precisely how RLUSD might accelerate this whole process. When purchasing XRP, banks and other institutions use Ripple's backed stablecoin, RLUSD, as a stable medium rather than fiat currency like USD. By removing volatility from the transaction process, RLUSD makes it possible to buy XRP in bulk with ease. Clearing the order book. Large buy orders for XRP are placed on exchanges by banks and other organizations using RLUSD. The cheaper sell orders are depleted as XRP is purchased, causing the price to rise to the order book's next available level. As the order book liquidity for XRP at lower levels is rapidly depleted, this could result in a sharp price spike. Loop of feedback. Compared to using typical fiat pairs, the RLUSD facilitates these massive transactions more quickly and efficiently. Because of its cost-saving benefits for payments, institutions may still find it profitable to use XRP even if its price increases. First scenario. Step 1. A bank makes a $1 billion RLUSD deposit. RLUSD is stored in a wallet or exchange that is compatible with Ripple and is available for use. Purchasing XRP is step 2. The bank purchases XRP on an exchange using RLUSD. Assume that this is how the XRP order book appears. 50 T for 100,000 XRP, $1 for 50,000 XRP, and $5 for 20,000 XRP. The 50 cents, $1, and $5 range are cleared by the bank's $1 billion purchase order. Step 3. The price of XRP has now surged to $5 or more following the significant RLUSD buy. Once all low-price sell orders have been filled, the price becomes the new baseline. Step 4. Continuous usefulness. The bank takes use of XRP's speed and affordability to settle international payments. Because RLUSD remains the reliable middleman, the method is effective and scalable. The significance of RLUSD: reduced volatility, enhanced liquidity, and quicker transactions. In conclusion, the Shane-Ellis theory's mechanism for purchasing XRP and placing sell orders becomes more effective and scalable when RLUSD is added. As institutional demand increases and supply at lower levels decreases, RLUSD acts as the stable, high-liquidity asset that enables large buy orders, raising XRP prices. Alright, so the picture is becoming more apparent, and things are actually beginning to fit together now. Let's examine what Ripple truly possesses: escrow account. There are about $37 billion in there. The estimated value of Ripple Liquid is $3.5 billion. However, to be honest, I think these figures may be a little off. Here's what I think. All things considered, Ripple most likely controls between $43 and $45 billion in XRP. Simply said, I'm glad you're here with me to ride this wave. Thank you for viewing this and for stopping by. My door is always open if you need assistance understanding any of this cryptocurrency stuff. And hey, if this struck a chord with you, hit the like button, forward it to a friend, share your opinions in the comments, and do whatever you want. I'll see you in the next one.